Hey investor friends, I'm Michelle Markey, and today I'll be talking about the latest happenings with Alibaba and how it and other Chinese internet stocks may be in the beginning of staging a legit rebound in their stock prices as the easing of Chinese regulatory pressure may be reinvigorating investor confidence in Chinese stocks. And also the city of Shanghai has been coming out of lockdown since the beginning of June. So that could only be good news for a lot of companies that were beleaguered by a lot of the lockdowns in the last couple of months since mid-March when China had locked down Shanghai, which by the way has a population size the same as Texas. So imagine a place the size of Texas in population being shut down for about 2.5 months, and that will definitely do damage to the economy. So considering Q2 may not look super awesome for Alibaba and other companies, maybe investors are starting to regain hope as we head into the summer months of 2022, as maybe business operations will be a lot more normal in the coming months. And so that's why Wall Street firms may be starting to buy more into Alibaba and other Chinese tech. But that's actually interesting since a lot of super investors seem to have bailed out of Alibaba in the first quarter. And part of the reason might have been because it had reached a high in that quarter of $138 per share. And then it bottomed at $73 per share. So probably news was still pretty bad to cause a lot of super investors to sell out of Baba. But I'm curious to see if super investors will buy back into Baba starting in Q2 and maybe in Q3 2022 as things start looking better, because it seems like Wall Street has the appetite for buying back into Chinese tech. So if you appreciate content like this, please be sure to smash that like button because it really helps out with the YouTube algorithm, and I greatly appreciate it. And I'll talk about all these things that are going on with Alibaba, so thanks. And could it be a coincidence that Alibaba's stock price may have bottomed at $73 per share in mid-March 2022, just as the city of Shanghai was beginning to enter its lockdown? Because a week after that, the management of Alibaba announced that they would be upping their repurchase program from $15 billion to $25 billion of Alibaba stock, knowing that they said that Alibaba stock was undervalued in one of their shareholder reports. So I would imagine that helped to instill some faith in investors that the company was willing to buy Baba at these low prices. So that may have put in a floor for Baba at about $73 per share. So it wasn't likely that Alibaba was going to trade that low again. And ever since, throughout the spring of 2022, Baba has been mostly trading in the $80 to $90 range. And recently it crossed back over the $100 per share range because there have been reports that Ant has been restructuring itself well enough, and then its application to form as a holding company was recently accepted by the Bank of China, and therefore that's good news for both Alibaba and Ant because Alibaba owns about a third of Ant. So at its peak valuation before its November 2020 IPO got scrapped, it was valued at about $150 billion. So that would have been equal to an Alibaba investment of $50 billion, and that just got washed away as Jack Ma had drawn the ire of the Chinese government, and then Ant Group had to restructure as it was no longer considered a tech company, but now more of a financial services type company. And maybe that's okay with them as long as they're able to go forward and then eventually have an IPO so that a lot of the people who invested in Ant may get their money back, and also for people to be able to invest in Ant, because it seems like a really growing infrastructural service in China where apparently 53% of Chinese consumers use Alipay, which is huge. If you can imagine the population of China being 1.4 billion people, and imagine 700 million people using Alipay, which is far beyond what we do in the US, where at most only 6% of iPhone users are using Apple Pay, which means that maybe if there's 133 million people using iPhones in the US, only maybe 8 million people are using Apple Pay in stores. So it seems that there's been a lot of resistance in a lot of places in the US to adopt some mobile payment systems, and the top ones remain things like Apple Pay and PayPal and Samsung Pay and Google Pay, and they all haven't really progressed nearly as far as some Chinese mobile payments have, as Alipay and WeChat seem to. So that could be incredibly important for the future of China and people's ability to invest in Chinese stocks. If Ant Group is able to get accepted as a financial holding company and then be able to do business that way, and then people will probably be way more pleased with Alibaba as an investment as a result. And after a year and change of a brutal bear market for Chinese tech, where if we use Kraneshares China Internet ETF as a proxy with their top 10 holdings in a bunch of big China tech stocks, it looked like they had peaked in February 2021 and lost 80% through mid-March 2022 before recovering about 10% from there, and now still being down 70% from their peak. And so it looks like, according to investment banks like Goldman Sachs, that the worst could be over, as they said that March may have been a bottom for Alibaba and other Chinese tech. And so maybe some Wall Street firms are starting to buy way more into Baba and other Chinese tech, with names like JPMorgan, Fidelity, BlackRock, Amundi, and Citigroup all buying more into Alibaba and the other Chinese tech names since the March bottom. So it seems that Wall Street believes that things are on the up and up for Alibaba and others. And after a lot of super investors were bullish on Baba throughout 2021, they started sharing Wall Street's bearish sentiment in Q1 2022, where more super investors were selling than they were buying Baba in that quarter. And maybe there's more super investors buying Baba lately if recent Wall Street trends are a clue as to what some super investors might be up to. And we'll just have to wait until Q2 2022's 13F filings come out to see what the latest equity positions are for some of these super investors. But as of Q1, they seem pretty bearish, where only 5 super investors seem to be buying Baba, 8 were selling, and 3 were holding. And some of the ones that stand out to me were how Bill Miller and Ray Dalio seem to have bought more Baba, whereas people like Charlie Munger of Daily Journal sold 50% of Baba after Charlie Munger has been one of Alibaba's biggest cheerleaders, and some speculate that they may have done it for some tax loss harvesting. And I also speculated as to what potential reasons might have been that DJ Co might have sold 50% of their Baba position. But I don't know how you do tax loss harvesting if you initially bought shares in one year and then sold it in the following year, but maybe it goes according to their fiscal year reporting. I'm not sure. And if you know the answer, please let me know. And then what also surprised me was how Greg Alexander of Sequoia/Conifer Management sold off entirely out of Alibaba after being one of the biggest owners of Baba. And maybe it's because there's other more interesting equities out there, with things like the NASDAQ being down 32% year to date as of mid-June. Maybe there's more interesting equities out there than some Chinese tech right now for Greg Alexander. And then also Phil Town sold out of Baba, so that also surprised me. And then we can see that it seems a little bit more negative in terms of super investor sentiment on Alibaba in Q1, but let's see if that turns brighter in Q2 and later on this year. And I also wanted to highlight how it looks like legendary investor Ray Dalio of Bridgewater Associates has become Alibaba's biggest cheerleader in 2022, because he's putting his money where his mouth is, as he's a huge advocate for emerging market stocks these days. And it shows in Bridgewater Associates' equity portfolio, where we can see that among its top 10 holdings, 3 of them are emerging market stock ETFs, and Alibaba is not too far down from these stocks, where it used to be in position 8 in Q4 2021 at a market value of $507 million, and then that blossomed into an $814 million position, making it into its 6th biggest position out of a portfolio that has almost 1,000 equity names. So it's amazing how much Bridgewater gained in confidence in Baba, so much so to put in another $307 million into it and make it into its 6th biggest position as of the first quarter this year. So I think that's super bullish for Ray Dalio to believe in not only Alibaba, but a lot of Chinese companies and whatever else is considered to be part of emerging markets. And that also resonates with what a lot of other experts are projecting for returns to be like across emerging markets. They might be better across the next decade if you were to invest in emerging markets. So if you want to pay attention to what some super investors are doing, I think Ray Dalio might be an interesting case to see if his investments in Chinese tech companies like Alibaba and other emerging market stocks will work out, because the other names that Bridgewater seems to have in their portfolio include a lot of American consumer staples like Procter & Gamble and Johnson & Johnson, and also things that we consume every day like Coca-Cola and Pepsi. And he's also invested in Costco and Walmart. So we can see that Ray Dalio is taking a pretty defensive position, but is really bullish on Chinese growth stocks like Alibaba. And finally, if we look at Alibaba's financial performance in the fiscal year ending March 2022, the results are pleasantly surprising, because you would think with a lot of the negative news headlines that the Chinese economy might be in the doldrums with Chinese consumer demand slowing and also there being real estate problems. But in spite of all that, Alibaba seems to be thriving and delivering double-digit revenue growth across most of its segments. So that's pretty impressive to me, where in places like their China e-commerce business, they delivered 18% year-on-year revenue growth. And then in the cloud segment, they delivered 23% revenue growth year-on-year. And even though they only delivered 12% revenue growth in the first quarter this year compared to the first quarter of 2021, it's still pretty much on the uptrend. And I think that it's pretty impressive where they're going with their cloud business, because their revenues increased by $2.5 billion year-on-year, comparing 2022's result of $11.76 billion of revenues to 2021's $9.26 billion of revenues. And so they had an income loss that was less than half of what it was last year, where they only lost $815 million compared to last year losing $1.9 billion. So that's on the uptrend. And about 8 months ago, I estimated that they should start breaking even soon, but I guess not yet. So maybe in the next year or so, they'll start not only breaking even, but generating positive cash flows through their cloud business, because others are pretty optimistic about the future of the cloud business in Asia, where a fund manager named Sid Choraria estimates that the cloud revenues will more than double in 3 years' time to about $25 billion. So that's pretty exciting to me. And then also, like I talked about, they had some share repurchase program increased to $25 billion. And of that amount, they bought back about 38% so far. So they bought in first quarter 2022, $2 billion. And for the fiscal year overall, they bought back $9.6 billion worth of Alibaba stock. And so they still have about $15.4 billion that they could still buy back. And that still leaves about $38.6 billion of net cash. And overall, at the end of the fiscal year, they still had a net cash position of $54 billion, which is still pretty close to what they had last year, even though their free cash flows are down a lot. So even though it seems like their free cash flows are not as good yet, I think that they're starting to recover, and we might see a bit of a dip in the financial performance for Q2 2022, but I think that things will probably look a lot brighter by Q3 and Q4 this year. And the one thing I want to leave you with is to highly encourage you to do your own intrinsic value calculations of Alibaba or any other stock you're potentially interested in investing in. Because if you just go with the intrinsic value calculations from articles online, it might lead you to believe that Alibaba is a value trap stock. And it might be if it were delivering only single-digit revenue growth as it did in the first quarter of 2022. But if you take a long-term view, it might not show the full future of what Alibaba and other stocks might be capable of, because according to that portfolio manager Choraria, Alibaba has been delivering double-digit revenue growth to the tune of like the 20% range, if not higher in the recent past. So I think that the future is incredibly bright for Alibaba, and eventually I think that Charlie Munger will prove to be right about Baba. And so far, even if Daily Journal is not willing to take as big of a leap of faith, it looks like maybe all those who are invested in Bridgewater Associates funds might prosper as a result of Ray Dalio's investing brilliance, perhaps. So we'll have to see if some of these super investors and Wall Street firms turn out to be right about Alibaba and whatever the future may hold for Alibaba. And if you enjoyed this video or learned something, please like and subscribe and let me know in the comments what you think about Baba. I'd love to hear from you. Till next time.